Good morning and welcome to another show of Talking Bull. This is Steve O'Hare from Signal Centre and it is the 22nd of May 2023. Sorry for the delay in getting to you, a few technical issues. We're going to go run through the news headlines, talk a little bit about that and then dive into the technicals. Please feel free to let me know if you want me to take a look at anything from a technical perspective, and yeah, we can sort of like dive in and see what's going on in the markets that you're interested in. So by all means, just let me know. Let me try and make sure I can see any headlines or any requests coming through on the Signal stream. Here we go. Yeah, looks good. Morning, Mark. Nice to see you again. Right, let's dive into the headlines. I'm going to minimize me a little bit more than that, and we're going to go through what we are seeing. Fed Chair Powell reiterated that inflation is far above their objective and that price stability is the foundation of a strong economy. He also repeated that interest rates may not have to rise as far as otherwise due to the tightening of bank credit conditions. According to Powell, further tightening was warranted until recently, but the Fed has come a long way and there is uncertainty over the lagged effects of policy. Powell added that the Fed has not made any decision whether rates are sufficiently restrictive, while the risk of doing too much rather than too little is becoming more balanced. Market overall considered that Powell's rhetoric was relatively dovish. Following the comments, there was a limited shift in market expectations, with a chance of a June rate hike declining to below 15% from 30% on Thursday. ECB President Lagarde stated that the central bank was heading towards a more delicate policy decision moving forward, with the bank courageous in taking the decisions needed to bring inflation down to 2%. She added that inflation is still far too high and the bank is not yet done. Following Powell's comments, the dollar edged lower with a retreat from 8-week highs and euro-dollar edging back above the 108 level, although dollar sentiment was still relatively firm. The latest CFTC data recorded a further increase in long non-commercial positions to 12,500 contracts and the largest long position since October 2021 in GBP, that's sterling. Markets will continue to monitor negotiations surrounding the US debt ceiling, with further talks between key players on Monday. The latest PMI data will be released on Tuesday, with flash May data for Eurozone, UK and US. Market expects further contraction in the manufacturing sector and solid growth in services. So that's what we're up to this morning. Morning, everyone. Morning, Sanadid. Morning, Mark. Morning, Mosh. And morning, Rice. We're going to run through a few markets that you've already highlighted. First of all, we'll go through it in a little bit of a process. I'll skip through the cryptos, skip through the indices quite quickly, and we'll focus on the FX markets you've requested. Also, taking a look at Brent oil and natural gas on the commodity side of things, and also gold and oil as well. They're quite popular. So we'll take a look at those. But let me just share my screen. Here we go. Right, cryptocurrencies. We've got a little bit of a standoff really in over the longer term and the medium term chart in Bitcoin. We've got an inverse head and shoulders formation potentially forming. The neckline of this was 25,400. Price action has broken through and made it halfway to its measured move target. The measured move target is around 35,000 in Bitcoin. Now, we did have a pullback. We ran into the resistance, which was previous support, now turned into very solid resistance between that 29,000 and 32,500 area. And we've pulled back to retest the neckline. Now, this is a common theme in head and shoulders formations. We normally get a breakthrough, get a retest of the neckline, and then the move higher. However, this is really the decision time. 25,400 is whether we are going higher or not. The daily chart seems to think otherwise. On here, we've got the opposing type of formation. It is a head and shoulders formation, not an inverse one. And we've broken down through the neckline. Haven't really closed way below it, but around the neckline, and we are retesting that neckline and have retested it. Potentially, the momentum to the downside is slowing down, so maybe that's the weekly chart taking over control from that daily formation that we're potentially forming here. Levels to watch really today: 27,680 on the top side. A breakthrough there will give the bull's heart, and a breakdown below that 25,400 to 800 area would be very negative for Bitcoin indeed. Ethereum, similar sort of price action, head and shoulders formation on the daily chart. Levels to watch there: 1740 on the downside. On the upside, probably need to get above that 1900 level to stave off the bearish woes. XRP, again, this is a bit of an awkward looking head and shoulders formation, something I drew on last week. I wouldn't really pay much attention to it, but it is that sort of topping formation that we're finding, and we've had a pullback from the 41-cent support level all the way back up to close to 48 cents. And really, bulls need to get this market above that 48.5 level to make things seem a little bit more positive. The bullish momentum that we've seen in this market compared to other cryptos seems to be slowing down slightly. So watch out there in XRP. Let's take a look at commodities. Let's look at gold first and see what that's doing. We had a really nice recovery on gold on Friday. Taking a look at dollar, you can see that dollar reversed sharply. That led to a rally in gold. Obviously, gold is priced in dollars. Let's jump back into gold. We'll have a look at the dollar index shortly. Yeah, so we've basically bounced from 1953.75. That's the low point. Oh, actually got down to 1952. So we will call that 1950 level as probably a good target level for the bears. But however, we did recapture most of Thursday's losses on that Friday, and we close nicely higher at 1977. Trading at 1975 at the moment. Really, we've got resistance all the way up, probably to around about that $2,000 level. That's the one to watch on a more medium-term basis. Let's take a look at crude oil. Crude oil on a daily chart has stalled at resistance 73.83. This is WTI crude oil. And Friday we had a spike higher, and again we rejected those gains and closed lower. This morning we have had a little bit of a follow through to the downside, but really sort of support coming in around about that 69.40 area on WTI crude oil. Brent crude oil, we are similar sort of price action. Resistance really coming in at 77.40. That's the level to watch, and on the downside 73.40. So a little bit of a dollar range there. Oh, sorry, 77.40, 73.4, $4 range. It doesn't mess about this. These Brent oil contracts, they're pretty volatile. Pretty flat on the MACD. So a little bit sideways, a little bit of a triangle type formation here, or some sort of wedge formation. But at the moment, really looking at those two levels to see where the next move is going to come from. Overall, sentiment remains slightly bearish on the medium to longer term charts on crude oil. Let's take a little bit of a closer look at natural gas. Going to take a look at DAX as well, Sanadine, so don't worry about that. So natural gas did have a decent rally towards the end of last week. Friday, we actually topped out at 278.50. Remember, the major resistance for us is around about the $3 mark, 305 in fact. And yeah, we're sort of seeing this double bottom formation that we've got from here. This is definitely one to watch. Just sort of like give you an idea what I'm talking about. We had this bottom here. There's a bigger double bottom potential formation, but that requires that break of 305. In the meantime, we've got this level of the neckline. I'll draw it in here. We can see, I think it looks like our analysts are looking to buy a dip to that neckline today. 257 is the level to watch, and the projected measured move target really we take that move and build it higher. That measured move target comes in at 307. So that's definitely something to watch. Now, Friday's price action wasn't promising. We saw that doji candle, sign of indecision, bit of a shooting star looking type candle also. So, and we've had a little bit of a pullback. We've posted a slightly lower low than Friday this morning. But yeah, potential for maybe a retest of that 257 level. That's what I'd be looking for. For me, that would provide ample risk reward to take the long in line with the short-term uptrend. Measured move target 308, and that's quite close to that horizontal resistance where we stalled at before 305.50. So overall, slightly negative after Friday's price action, but still remain positive for a little bit of a push higher to that 305.50 level. Remember, on this chart, we do have this quite serious gap all the way up at 434. So does feel like a bit of a bottoming formation in natural gas. Let's take a look at FX now. I can see the, yeah, we're going to take a look at cable, sterling yen. We're also going to take a look at euro dollar, obviously. I'll take a look at the dollar index first, and Swiss yen and DAX. So they're the markets I'm going to run through. If there are any others that you want me to take a look at, please feel free to shout. So dollar index has formed a little bit of a bottom, and we have got this double bottom formation, the short-term double bottom formation again, in a similar way to natural gas. We've got a potential for a larger double bottom formation, but the neckline for that is up at close to 106, the figure. This bearish dark cloud cover candle from Friday is negative. We've had a little bit of a spike lower this morning. However, we've regained some ground. We're back above Friday's close. So still looking relatively positive, but we have had quite a decent impulsive move higher on the short-term basis, and price action stalling just in front of where the measured move target was for this double bottom formation here. Again, let me just highlight it so I can be a little bit clearer on the chart what I'm talking about. And then there's the neckline in between. So you have the bottom here, and the neckline in between. That is prices broke through here. That confirmed it. Had a bit of a retest after a couple of days and then pushed higher. So that's played out quite nicely. It hasn't quite hit the measured move target, but it's close enough for me. You know, if you're sort of like, if you do manage to get longs around there with a tight stop, you can start to edge out of your longs as it approaches that measured move target. Taking a look at euro dollar, we've got down to, we've got a big level here which we had highlighted 107.80. Price action actually got down to 107.60, so pushed through that support level and then reacted higher again. So we're above that at the moment. So you can see momentum on the MACD is stalling a little bit and reacting higher. So at the moment, we've got a previous support level, which was the swing low from the 10th of April. That's acting as a resistance at the moment. That comes in at 108.31. Price action already flirted with that this morning and pulled back slightly, back down to 108.06 at the moment. But yeah, potential for a bit of a turnaround. Obviously, we'll watch that this morning. We're still bearish on the 4-hour chart, so still in negative territory from a trend perspective on the shorter term time frame. The hourly chart has pushed through that Ichimoku cloud. You can see it here. That's formed a nice little bottom here. Are we potentially forming an inverse head and shoulders formation? You can see how this could play out. I know you might get bored of me talking about head and shoulders formations, but they are very accurate when it comes to technical analysis. That's the sort of thing we could be looking at. Downward sloping neckline, really sort of like we're looking to clear 108.30 on euro dollar to confirm that. Otherwise, support coming in slightly below here in the form of the cloud on euro dollar. I would say 107.85, around about there, could be a level to consider that we could hit quite quickly. Taking a look now at cable, sterling, dollar. Let's take a look at the daily chart to start with. Well, let's take a look at the weekly chart. I mean, we've got this bearish outside week, which was formed the week of 8th of May. So that's really sort of like seems to have put a top in 126.75. Last week was a bit indecisive. We did make another low. So it does feel like the pressure's on after this impulsive move higher from the lows in September 22. So definitely levels to watch there. On the downside, last week's low is key. Let's take a look at the daily chart to get a little bit of a closer look at it. We can see that the 124 level will be key today. Trading currently at 124.23, so just above that. And resistance on the upside coming in around about that 125, 46.5 level, which was the high from the 16th of May last week. So they're the levels to watch on sterling dollar. Overall, it does feel like we have topped out a little bit. So I'd be slightly bearish on this on the intraday perspective. You can see the 4-hour chart. We are down below the cloud, and you can see it's a nice, just posted a nice higher low on Friday. Sorry, lower high on Friday, and currently rejecting further downside potential to come. But watch that 124 level. Taking a look at cable, actually looks like quite nice for a gun to head trade idea, looking at the hourly chart as well, breaking below the cloud, potential for further downside there maybe. Right, let's take a look at these. I'll go from the top. It might not make sense when I'm going through them, but I'll take a look at sterling, yen, Swiss yen. They're the yen pairs I'll have a look at. So take a look at sterling yen. Weekly chart, very, very strong week last week. We've taken out levels that we haven't seen since all the way back in 2016. So very strong candle indeed. A little bit of a pullback to start the price action off this morning, but only a small one. Very positive on the daily chart, obviously. We have stalled just above that previous swing high and reversed. Bearish outside candle on the daily after a hanging man. So maybe there is a bit of room on the downside to take a look at. For me, obviously, the key level probably today, we can sort of like see it was a swing high from the 10th of May, around about that 170, 170 and a half level. That was the low from Thursday. We stalled in front of that, got down to 24 on Friday, and today we've also been down to 171.20. So that's support coming in just below there. We're sort of trading just above that. So again, another potential for a gun to head trade idea. Feels like the sterling might be the one to sort of play today. So let's take a look with sterling yen. Also want to look at Swiss yen. Here we go, Swiss yen down here. Again, quick look at the weekly chart. Looking very strong. We had the swing high from the week of the 1st of May. That was one just below 154. Got quite close last week. Got up to 153.77, and we're still trading close to there, 153.40 really. And again, we've got to go well. These are pretty much highs that we haven't seen on this chart historically. So still feels like we've had a really decent impulsive move higher, and still feels pretty strong after that pullback down to the 149.30 level. On a daily chart, yeah, last couple of days of price action looked to be stalling, limited upside, and we have posted what could be considered a lower high, but really need to get confirmation, maybe a break down below 152.70. That would give us a little bit of confirmation that we are topping out slightly after the really strong impulsive move higher. So 4-hour chart remains pretty strong. Really sort of like trend support is a long way off below the cloud. So yeah, I'd watch that 152.75 area, 152.80 area, and really that could be quite pivotal today. So we've covered euro dollar, we've covered Swiss yen. Going to look at DAX in a second. Euro yen, covered that as well. So it was euro yen I covered, I think. Yeah. And or maybe it was sterling yen. I'm not sure. I think it was sterling yen we covered. Let's cover euro yen off just in case. Correct me if I'm wrong, anyone. Well, last week was a much more positive move for euro yen. Again, the market's sort of like at quite heady heights, going back really the highest levels we saw in 2014 were well just below there at the moment. That was at 149.79, and then previous to that it was probably 2008. We haven't seen levels like this since 2008. That's a bit of a scary thought, especially with the banks performing the way they are at the moment. Levels to watch on a short-term basis. Let's get the 4-hour. Well, let's take a look at the daily. Really strong bearish outside candle on Friday's price action, and negative today as well. So maybe again posting this lower high, this reversal candle that we see here, maybe potential for further downside. There's plenty to look for at the gun to head trade idea. I feel like I'm going to go out of my comfort zone and do something a little bit different today. On the 4-hour chart, the price is really stalled at that 149.80 level, so setting shorts around this area here, looking for some downside. Your stop should be just above that 149.80 level, looking to target maybe a move lower, potentially around about this area of support down where the Ichimoku cloud is, 147.75. So a little bit of room to the downside. Stop has to be quite tight though. And yeah, I think we're pretty much covered off everything, and we can go into indices. Let's start with the DAX. The DAX is one of my favorite indices to trade, and that is at well, posted a new all-time high, was it? Looks like it. 16,333 we got up to. We're a little bit lower than that this morning. Opened up a bit lower on the back foot slightly, but what a way to finish a week. All-time highs posted in the DAX. Absolutely incredible move in that market over recent days. You can see that this break higher from this resistance. We broke higher, retested that neckline support, and then continued higher again. Broke through that 16,000 level and straight up to them all-time highs. Today's candle obviously has got plenty of potential. We've still got a long way to go in the day. Really, we'd take Friday's range as the sort of like the key metrics to consider. 16,200 was the low on Friday. 16,333 the high. That's what we'll be looking at today. Should have a little bit of resistance at that high, probably more support at the low because of the sort of trend. Stick with the trend when it's acting like this. On the 4-hour chart, again, quite an incredible move higher. You can see we've topped out a little bit short-term basis. Probably got support around about this 16,230 level. Below that, I'd look at 16,100 and then the 16,000 level. So plenty of support levels there to look out for. On the top side, you're looking at projection levels. So I would just be happy if you're long of this, stick with it until you get some sort of decent reversal candle on the daily chart. Taking a look at let's take a look at the daily charts again let's take a look at the weekly charts in the US indices. We have got this downward trending resistance line, which we topped out at from the week of 1st of May, have been negative since then. Support coming in just below around about the 32,900 level. NASDAQ has sort of like gone with the DAX, really sort of projected higher, taken out that resistance there. We could sort of say the resistance was more at 30,722. That was the high from the 15th of August, broken up and closed above it. So good potential for the upside on NASDAQ as well. S&P has seems to have sort of like retested that downward trending channel and now continuing higher, taking out levels that we haven't seen since August 22. So looking pretty positive from an S&P perspective as well. So thanks a lot for your input, guys. Been good to sort of like dive through those markets. Hopefully it's helpful. Feel free to ask me any other questions relating to those or other markets, and then we can move into the next level of our show if there's nothing else to cover off. And we're going to look at our gun to head. It does say gun to head, but it's hiding behind the banner at the moment. So this is the point in the show where myself and Joe, normally, who's not here today, pick a trade idea. We also pick a stop and a target with a risk reward ratio of at least 2 to 1. This is called a gun to head because we just have to come up with a trade idea on the spur of the moment. We have to enter at market. It makes it very difficult because you're not really looking at the real support or resistance levels of where you think the ideal placement of order entry should be. The trades either hit stop or target during the day, and they close at 9 p.m. We risk 1% of our capital, which we started at the start of the year. We started with a live account of £2,000. We're down just below that. Let's take a look at where we are on that. 1960, so we're down 2%. We had two losers on a Friday. On Friday, we were trading at the watermark of 2,000 after I don't know how many trade ideas. If we did probably 2 a day since then, yeah, probably a few 100 trade ideas or something like that. But yeah, let's try and get some winning. We seem to be struggling to pull away from the watermark, and you know, we do want to pull away to the top side, not the bottom side. So I'm going to go and look at FX today. Let's minimize that down and take a look at some of the forex that we've got going on in here. I liked cable. That looked a little bit toppy for me. What I like to do, I like to scan all the charts, the weekly, the daily, the 4-hour and the hourly, trying to get, I like to try and have a plan where my trade idea, I would get into it as long as the hourly and the 4-hour are breaking through the cloud or below the cloud, I'd sell it. Above the cloud, I'd buy it. And then the stop can be quite sort of like tight for the day. So that's quite nice. Sterling Swiss looks pretty negative. The sterling yen also looks slightly toppy. Again, we're in this cloud, but I do like this sterling yen idea, and there's plenty of scope for some volatility in this as well. So for me, ideally, I would wait for a break of that 171.19 level. We have pulled back slightly, so there is potential for a little bit of a, let me just try and get something, see what. Yeah, I mean, if this is a toppy formation, it plays out maybe like head and shoulders type formation. Yeah, potential for a move down to 169.90. That doesn't seem too bad. Looks like we are pulling back higher. We just turned green on this last hour. So as I say, ideally I'd wait for a break of that 171.19 and get short then. But I haven't got that option because it's gone to head trade idea. Now, this doesn't look too bad. I've given it a little bit of room on the upside. My risk reward, you can see here, 2.38 to 1, so that's not too bad. I'm going to go with this. Oh, sorry, I have to do it on the right chart. Come on, sterling yen. There you go. Let's redraw that. Right, let's do the band around that time. There we go. That's what we're looking at. Let's try and get that trade on now. We're going to sell. We're going to make sure we got a 1%. I like that as well. The stop is above the 172 level. 169. There we go. We're in. We're targeting a move to 169.93. Stop is at 172.02. So looking to sell. Well, we sold sterling yen. There we go. Yeah, for me that looks like it has some potential, and I've given it a little bit of room on the upside. If you want to be more aggressive, you can have your stop tighter, but you know what these markets are like. They're notorious for just finding your stop and then carrying on the move lower. But anyway, that's just the way it goes sometimes. Okay, let's take a look at what we've got lined up for the rest of the week. UK public borrowing data, 7 o'clock tomorrow morning. That's the PMI. 9 o'clock tomorrow morning, we got Eurozone PMI data flash reading. Events for the week, global PMI data, UK consumer prices on the 24th, along with Federal Reserve minutes. So thanks for joining me today. Thanks for your input, guys. Hope you've enjoyed the show. See you tomorrow. I think Joe's back tomorrow. Yeah, we can get back into the show again tomorrow. So good luck trading and be careful out there. Take care, everyone.